412. We had FOMC minutes. I kind of want to walk you through a couple trades that I missed and a couple trades that I took. I took a nice play on puts with QQQ and calls shortly after. So let's go through them. All right. So first things first, right? We see that price we gapped up, but throughout the pre-market, we were losing a lot of sellers were really stepping up, right? So first thing I like to mark out is that we had a gap to fill down here, and also the high of the previous day is right here. So we are opening at above the previous day high. So that's just something to note down. So the first minute, 2 minutes, this is the 2 minute 2 minute chart. First 2 minutes, we were already above the previous day high. All right, so it's good to note that we do have a gap to fill since we're breaking some type of support over here, which was the previous day high, right? The play that I missed was that there was momentum pushing down to fill the gap, and that would have been a nice play because we quickly filled the gap and we actually took out the previous day low. So at this point, all right, Q's daily candle was a bearish engulfing. So I missed this play, this drop gap fill. And there was another play that I missed. I was kind of watching and kind of trying to see which direction the market wanted to go. I was really patient today, and I waited about an hour or 2 hours before I actually took the first trade. So after this gap is filled, you just delete it. We have this fair value gap, a bearish fair value gap, because we go from candle up, impulse candle, and candle down. So this is a bearish fair value gap. I'll look at this area as some type of resistance. So price does make its way back up to this fair value gap. And if it closes above it, then this is broken and that will act as a support. But as you can see, we lose steam and we kind of get pushed down. Right? And it's going to be a little tricky, but the thing that lets me know if the structure is changing is if we can close above here. And if right here we had multiple touches at it, actually create a higher high. But the opportunity that I missed right here was that I was leaning kind of bullish, but I missed this trend line break. And this is a setup that I usually take for this bearish fair value gap. When we get a retest, fail to break above, we usually get some type of trend line break. I missed this one. So what do? Well, I look for another opportunity since I know that we're pushing down. That do we have another fair value gap? Possibly right here. So price moves above here. I actually entered on this first red candle on the second rejection of this fair value gap. And my target was this prior fair value gap from 2 days ago. It was just there and it was always acting as some type of support. So I was going to see if it was going to get touched. So if I were playing puts, which I did, and this at the 7:50 Pacific time, I was fortunate enough to get my target hit immediately, but I originally wanted to take this down to the 313.50 support. It acted as a strong support prior. We had a bounce here and a bounce here. And that was initially what I wanted to do, but because of how, I guess, slow the market was, that I took profits at this support. But looking back at it, right, we have an opportunity to see that we have a shoulder, a head, and a shoulder. So if we break this neckline, then this would be a head and shoulders. So I got out, but priced eventually, as it always does. You get out too soon. But this was a great 10-minute candle. I caught it from the fair value gap to this other fair value gap. So it was a 10-minute trade. It was a good risk to reward. And I was happy nonetheless. Oops. And so the next trade I see is that usually when I see some type of head and shoulders, I notice that there is a inverse head and shoulders that comes at some point in time shortly after. So I see this support, which is kind of a bear flag. I see a bounce off support and moving up. So if we can get above here, then this will act as a support. A resistance now turns support, and that would make it a shoulder, head, and a shoulder, which is a bullish pattern. Let me just delete this. So price does move above it, and I see an inverted head and shoulders, and I enter a trade 728. I enter a trade up right above here for long. Went long. My support is to hold this fair value gap, and in this 2-minute time frame, I see another one. So it acts like a double support, like a heat map of the zone. So as long as it holds above here, this is my support. I'm looking for it to take out, to get through this fair value gap and potentially get to this fair value gap. So let's see what happens. I hold this trade. It does come down a little bit, but I have a clear stop as if we can close below here, and I'm still anticipating that this inverted head and shoulder play out. And we do, right? And pushes up. We get back into the previous day lows, and we get into this fair value gap. So this one actually was giving me problems. I held this for quite some time. 1018, I believe. And I was still holding this area. I was giving it a little bit of flexibility, my stops, and I was trying to let it run. Typically when we get this uptrending support and we have some type of resistance, this uptrending support, pushes the price, and I was going to anticipate that we hold some type of support here and then at least make a push to this fair value gap. So it was actually holding for quite some time, but like I said, I was leaving it a pretty loose stop right here since it was already moving in my favor for this long. And eventually, after multiple touches, we get to the top, right? Didn't quite hit this this target, but once it started coming down, I exited. And at one point, this was at 105%, still closed with a pretty good percentage, and I was happy with this trade. So today I was able to catch both puts and calls. And yeah, I wanted to share that with you, and all in the span before the actual FOMC. So I hope this video helps. If you like more of this, please like, comment, or subscribe, and I'll catch you in the next one.